You want to focus on picking the right market, get a handle on financing. We're not here to be mom and pop investors. We're here to scale a portfolio, move over to commercial financing, and build a solid team. And these are all learned skills. This fear that you talk about, it's none of this is something that is inherent to us. And you can always get to the other side of it. What is happening in the market right now, what challenges are being presented to us, and how to navigate them, and what opportunities are there and how we can take advantage of them. So that's what we're going to get into. Today, what we're going to talk about is solely based on our experiences. This isn't anything that we're talking about today isn't based on any hype or anything that is regurgitated. We are active investors. We are in the trenches with you. We have an active renovation project going on right now, and we help investors create between 50 to 100 million in assets every year from our community. And so we are fully active in this business. So everything we're going to talk about today is comes directly from my own experience. It's not like stuff I've heard somewhere and I would share with you. And one big rule that we have in our community too is when you're talking about something, when you give somebody advice, make sure that it comes from your own personal experience. So many times I've consumed content or communicated with somebody in a forum or online when I first got started, realizing that their referral, their connection, their advice was completely not based on their own experience, and understanding that and being burned by that many times. People are coming, this is my big pet peeve. Everybody's coming with good intentions. It's not about intentions. It's about they think they're helping, but they're not. I'm going to get into the 5 strategic wealth moves that we're making and our members of our community are making right now for real estate investors. So these are all going to be super practical concepts that we're going to talk about today. Some of you reached out and you were talking about things like, what if I take on debt right now? Will I regret it? Or what if I lose my job? Or what if my tenants lose their job and they stop paying rents? What if the political climate changes again and some other change happens, right? So things have been in flux, and they may be the reason why some of you have fear, for all the changes that are happening. Should I wait till the rates drop? I feel behind. Is it too late for me? What if I make the wrong move and lose money? All of those things stem from all the different things that we hear around us. And one thing I will say that you're not wrong, right? You're looking at it from what's happening currently around us. But to put things in perspective, Uber was founded in 2009 in the middle of the Great Recession. Airbnb was launched when people were trying to save money during the housing collapse. Slack and WhatsApp were also born during financial downturns. And what these companies did was they took advantage of what was happening during a storm. They didn't wait for the storm to pass. And that's the key takeaway here is, if you're ever feeling unsure, if you're ever feeling like this is the one thing that's holding me back because of something you may have heard or you may have something in mind from before, that's what I want you to keep in mind, that, hey, these big companies were formed during a time in history when everybody else was kind of shying away from doing big things, for thinking of big concepts, having that big vision. When everybody else was in survival mode, some people decided to not be in survival mode and think about, what can I build? How can I fill a void? And that's how they grew successfully during that time. And it's a way to basically, instead of worrying about what might happen, think about what is happening right now and take advantage, right? That's what we're doing. So if you don't know us, my name is Palak. I'm in business with my husband, Nidhi. We are founders of Open Spaces Capital. I was an engineer. Nidhi comes from a finance and tech background. We built a $10 million rental portfolio within just a few years. And everybody started asking us how we were scaling so fast. And that's why we started teaching people how we were doing it. Eventually, we were featured on Bigger Pockets and Business Insider and a lot of different publications. And we wrote a book about our framework. Our framework is called the Scale Framework. It's allowing us to take an age-old strategy that has survived all the different market cycles and modernized it so you can run it like a business. So the age-old strategy that we specialize in is the BRRRR strategy. It allows you to start with a finite amount of capital and scale exponentially. But what we did was we saw everybody who was executing that strategy, they were doing it in a way that didn't work for us. We weren't doing it just for money. We were doing it because we also wanted freedom. And so we applied a lot of business principles to this strategy. And instead of running it like mom and pop investors, we built it into a scalable business. That's why our framework is also called Scale. So the first move that we're making is always remembering that waiting actually costs more. This is what happens when we sit on the money, when we're like, oh, let's just put it in a bank somewhere. The interest rate in a bank, it cannot keep up with the inflation. So money just sitting there, it's just sitting there and losing value. And I'll give you an example, and that's going to make it super clear what I mean. So my mom lives in India. My dad was a builder, by the way, but he passed away when I was 5. So she was a single mom, she raised me. She was a principal in a school. She retired. And she said, I have this house, but my dad had built that house and that area had come up over, she lived there for 30 years. She's like, I'm going to sell this house. I'm going to move to a smaller town where, my extended family lives, her brothers and sisters, and her mom and dad used to live there. So my grandparents, I'm going to move there. I'm going to buy a flat condo. We call those condos in this country. I'm going to buy a condo. And what I'll do is I won't spend all of the money in buying that condo because it's a smaller town. The real estate prices are low. So she took the money she got out of it and then she divided it in half. Half of the money she used to purchase that flat, the condo. And the other half, she put it in a savings account and she was going to live off of the interest. Now, fast forward 15, 18 years from that day, her condo has tripled in value, right? The money that was put in the condo is now 3 times what she invested in it. But the money that's sitting in the bank account is exactly the same amount that she put in. And it's now that money means not that much. That money means nothing now because after 18 years, that money is worth not that much. And so because the expenses keep going up, right? Her expenses are increasing, but that money doesn't change. And so it's a real life example when I think about it. And I was telling my mom, I was like, this is what inflation means. And so real estate is your best hedge against inflation. We have to invest our money in a way that money continues to grow and in a way that keeps up with inflation. So actually, waiting costs us significantly more than we think. And so if you have fear as something that you talked about, the biggest thing holding you back, I think the bigger fear is keeping that money without investing it in assets that keep up with inflation. The second piece is remembering what history teaches us about wealth and real estate. So I'll tell you, as a single woman living in Illinois, I purchased a condo right before the crash, right before the 2008 crash, because everybody was buying real estate. I'm like, I'm going to buy real estate too. I didn't know how to calculate any numbers. It was just for me. I was going to live there. Purpose was not investing. I didn't know anything about investing. I still remember the price, $123,000. And it felt like such a big amount. I even negotiated like the last $2,000. Okay, $123K I bought that property for. After the crash, at one point, it was worth $80,000. And that was the only asset I owned. And it meant so much to me. And it dropped in value. And I couldn't sell it because I owed more than what it was worth. I had no choice but to hold it. I had already moved out of the state. I was living in a different state, rented it out. It was cash flowing. And I didn't step foot in that place for years. A property manager managed it. I got the rent, paid mortgage, principal, taxes, insurance, some expenses here and there. That property gave me such amazing cash flow for a whole bunch of years. And then when the property values came back up, I was able to sell it. In the meantime, the debt was getting paid down because I owned that asset. And I was getting tax benefits because I owned real estate. and I was getting cash flow and the property was appreciating. And even though it was the worst type of property bought, don't buy condos. It was the worst type of property that I had purchased at the worst point in history to buy real estate. By the end, I still made over 100K because I held on to it. So what does history teach us about wealth? What it teaches us is if you are a long-term buy and hold investor, if you are in it because you want to build wealth and you're banking on the cash flow, the debt pay down, the taxes, the appreciation, if you're banking on all of these, the market cycle does not matter. It doesn't matter when you're investing. There is a saying, wealth is not made by timing the market. Wealth is made by time in the market. We started investing about 8-10 years ago. People were like, I don't know if now is a good time to invest in real estate. I became a full-time investor between 8 and 10 years ago when my son was born. But there were people who were still saying, not a good time to invest in real estate. I don't know, will the interest rates come down? Will there, be more inventory? It's a buyer's market, it's a seller's market. People are saying that this whole time. Guess what? None of them have still invested. And meanwhile, we've made millions during the same amount of time. And the other thing too is economists have all these predictions and they are often wrong about their predictions about the market. Okay, so for people like you and me, I'm not going to try to be an economist. If they can get it wrong, they are the experts and they don't get it right, how can I be the one who's ever going to get it right? I am not going to worry about what's going to happen in the market. I'm going to worry about what can I do now? What opportunities are being presented to me? So we've seen all different things. Sometimes there are a lot of deals in the market, but it's very hard to borrow money. You have to have everything perfect to borrow money, because lenders are not willing to lend. Sometimes deals are hard to find, but there is so much money in the market. Lenders are like, hey, interest rates will keep them really low from our end. Please borrow money instead of having our money sit, because nobody was buying because there are so many, the deals are hard to find. Then there is certain times in the market where you find that the interest rates are high. And so the market continues to change. You have to figure out, how do I leverage what's being presented to me right now in this moment and continue to invest? Here are some tactical moves that can make you money right now. So number one, some of you have expressed, what if my tenant loses their job and they can't pay the rent? If you're in a market where you're concerned about that, Section 8 is an amazing thing to invest in. And what you're doing is you're not only ensuring that the government will pay rent, and statistically, Section 8 tenant will stay in your rental for 8 to 10 years. So once you have one tenant, they're going to be there. So what we did was we shifted majority of our portfolio to Section 8 rentals. So not only are you guaranteed the rent from the government, but also you also have the ability to make social impact. You're helping a family. 2/3 of the landlords don't accept Section 8 vouchers. And we have a big affordable housing crisis going on right now. So you can really actually be a part of the solution. It's not just guaranteed rent. So we did have Section 8 rentals at the time, but then we actively shifted some of those properties to Section 8 rentals. So you can do that if you're concerned about people not being able to pay the rent. If you have equity in your current home, which a lot of us do right now, you have equity in your current home, leverage that equity to do the deals. This is what I always tell people, that equity in your home means nothing unless you've borrowed it and did something with it. It's not going to mean anything until you sell that house. The equity otherwise is just a number. It's sitting there. So take that equity and redeploy it and grow your portfolio that way. We've done this multiple times. Like for your primary residence, if you're sitting on some equity, we've done it 3 or 4 times. So I'm sitting in a burr. This basement was pretty terrible when we bought this house. And we knew that, and we did that on purpose. We're like, great. Now we can get back the down payment that we used to purchase this house. And one of our students is a designer. And I love, when there is an opportunity to give business to someone, I love seeing that somebody who's our client we become their clients, right? So Rupam designed this space and she did a phenomenal job. And we are able to have a great space to work in, which is 100% paid for because we know how to do the finances. We know how to borrow money and we know how to do the numbers. Now, my business pays rent to us personally to be able to work from a beautiful space. And we were able to generate the entire down payment that we used to buy this house through this burr. And we're about to do it again. And this is our third house that we have done it to. This is not even the first time we're doing it. And every time we have upgraded the house. Last time we bought a house, primary residence, for $620K. I think we put in $100K in it. We put in an additional bathroom, a 100-year-old Victorian, so they always need work. Like even if they look renovated, they need a lot of work. So we put in an additional bathroom and a half bath, and then we redid a couple of the floors. And of course, it appreciated. Instead of refinancing, we got a HELOC for $120K, I think. And then I took that HELOC and I took it to a short-term lender and bought a 10-unit building with that HELOC. And then when we did the burr on that 10-unit building, we got the $120K back, paid off the HELOC, and then we sold that house. And then we cashed out all of that money, and then we were able to upgrade to another house that is much more expensive. So all I'm trying to say is once you get this game, you can do it so well and you can scale so fast when you understand how to tap into the equity of your existing rentals. And that's what burr really is how do we increase the equity and then how do we redeploy it, right? So tap into the equity of your current home and fund more deals. And then be sure to use the scale framework. There is nothing else like it. What we're also doing right now is we're investing in secondary stable markets. So I strongly recommend look into secondary markets that are stable. They don't have a lot of volatility. Commercial financing. Okay, do not use personal debt. That is how we started. We didn't know any better. Commercial financing is the way to go. And then make sure you focus on building a good team. You want to focus on picking the right market. Get a handle on financing. How do I get commercial financing? Stop using conventional financing. We're not here to be mom and pop investors. We're here to scale a portfolio. Move over to commercial financing and build a solid team. Learn how to manage a good team. Learn how to vet people. If you're afraid of construction, it's because you don't know how to vet contractors. You don't know how to run projects. And these are all learned skills. This fear that you talk about, none of this is something that is inherent to us. It's because of something we heard. It's because of a skill we don't have. And you can always get to the other side of it. So with all kinds of market cycles that I've seen so far, primarily, I have noticed that the people who take action are the ones that are consuming the right kind of content. You will know when your body stiffens, when you're listening to a podcast, when you're watching a video. You have to understand negativity sells. The content you're consuming that is making you feel like you cannot do this, now is not the right time, the market's about to crash. I don't know. Every year somebody says that because it sells. Negativity sells. It gets them clicks and it gets them views. Fear mongering is the best way for people to get your clicks. And so you have to really protect your mindset. And that's your job. You know how they say nutritionists say we are what we eat. Our mindset is what we consume. That's what it's made of. So the way you're feeling right now, it's all about what you're consuming. And I'll give you an example. We had someone on our team that came in highly recommended. We did all the vetting. We did everything. Great. But that person had the worst mindset. And these days, everybody has therapy speak. Like they know how to put everything into words that sound super believable. That person did not have faith in this business. And then every time that I talked to them, I was like, oh, we need to change the market. We need to change the strategy. We need to just felt very negative about everything. And then we switched out the team member. And immediately after we switched out the team member, our cash flow went up and our properties, the portfolio went up. What a big difference in the people you're surrounding yourself with. If you don't have people who are pushing you to do better, people who believe, who are optimistic that this world is actually going in a positive direction, if you're not surrounding yourself with people like that, that's what your mindset is going to be like. It's about what you're consuming. And so if you're not a part of a community where you can just go and hear people talk about things, where you can go and see people doing the things that you want to do, if you're not a part of that, you are consuming things you shouldn't be consuming. So just saying it, like, you need to really protect your mindset. And I don't know, a lot of people are not on social media, but the kind of content you will consume, you will get targeted with more content like that. So be careful what you're watching, and because then you're going to get retargeted with the same type of stuff. You are interested in investing in real estate. Some of you are already investing in real estate. You're already smart. If you're smart, analysis paralysis and let me just make sure everything is perfect is a tendency that we all fall into. Make sure that you give yourself a deadline. And we do this work in our community where every month we get into like, hey, let's look back. Let's go through our goals and then what are our goals for the next month. Let's go and tackle them and how are we going to do things differently. Whatever works for you, set yourself some targets and look back, get curious and figure out your next move. And don't be a maximizer, you guys. And you know how you know if you're a maximizer or not? You will, if you're going to go buy ketchup, you won't just pick up the first bottle of ketchup that looks good to you. You're going to go and read all the labels. If you're in the market to buy a bike, you're going to try all of them. You're not going to just pick, okay, I like this one, I will buy this one. You're not like that. I'm a maximizer. Like, this is me. If I want to buy one thing, I will go on Amazon. I will filter it by 4 or 5 things. And then I'll be like, okay, now I have 10 options. I have to look through all 10 of them. And my husband is not. And which is a great thing for our team because we can't be the same kind of person to partner with each other. He will be like, okay, this makes sense. We're doing it. You got to take action. And this is a cliche, but I have to say it. Best time to plant a tree was 20 years ago. Second best time is now. So take action, you guys. That's like the biggest thing I could leave you with is take action. When you're ready to get serious, you can join us at theinvestoraccelerator.com.
It's like getting 1,000 episodes worth of information in 5 days, and it's everything you need to build your actionable plan to financial freedom and making work optional.